Okay. So now we are moving to these are examples. And these are now it means that the sidebar is really column. These are different currency pairs. This is the currency pairs. See, it is not currency pairs. Like these are meanings that affect this particular country. Okay, so it's great, which means it doesn't really affect that much. So it has to be affect that much. We are talking about the 𝗕𝗜𝗡𝗧𝗏 USD. Now, if you put it on this. The importance is very high, so it means that not all the platforms so now look at the previous data. Previous data was minus 73K. ADP non-farm employment change. Now the forecast was 7K. That means they are expecting it to be positive now. But the data that actually came out 104K, the K times 2 of the forecast itself, and the K times 3 or times 4 of the previous data. Okay, so this was what this was the need. Just at the time that this data came about, now that time now was the exact time on the market. If you check it with the time that that age is done. It's the same time that exact 1 o'clock or the time that this currency pair started dropping really hard. It's always in GMC. So the chart is also measured. Also the timing is also in GMC. The time that we're looking at the chart also in
If you like forex like this.
Okay. Yes, so this is the same time. So this news, the next important news was this sales GDP sales news. When you click on it, you don't get one of the GDP gross domestic product sales, and they extend more right here. So if you click on it, you see the previous data on another day. So now, if you are to trade again tomorrow, this step first. If you click on this, then you see all the major you see all the news that are coming out today. Okay? You get the point now, right? So now, before you trade any currency pairs, again the next day you have to check out those news, actually what's coming out, what news is going to be, you are expecting that day, and if that news is going to affect your technical analysis and all of those things. Now, let's look at technical analysis. That we're going to be revisiting it and maybe from time to time to get to familiarize yourself with it more. Then let's look at some technical analysis. Now, technical analysis is you being able to tell what is going to happen in the market based on your analysis of how the chart behaves based on the behavior you are seeing currently on the chart. And this analysis ranges from the shape of the charts, the candle patterns, the indicator, maybe you're using indicator patterns. Now, those are some of the tools that you use to actually technically dictate the next direction of the market. Now, there are several technical analyses. Every trader has their own technical analysis that they have completed, either based on what they've learned before, or the one they were taught, or something they just sat down and did themselves. Now, no, there are no 100% technical analysis. Maybe there are only 99% of them. They are always about the market is now working order pattern. So now there are several technical analysis, but let's look at one that is very important. Now, this is how the chart is, the market chart. The price against time. Now, this is how the market moves. This is how the market moves. Now, I'm using line chart. Remember that we have line chart and candle chart or something. They will still give you the same analysis. Now, looking at this, the way the market goes. If you notice something, you discover that when market touch here, when market touch this point, it reversed. When it touched the same, when it came to the same point at this level, it also reversed. At this point here, it came and touched almost the same point. It also reversed. Now, what does that tell you? What does that tell you? That tells us that there is a huge barrier right there. It tells us that there is a huge barrier right there. This is what we're doing right now is what we call price action analysis. Like you're analyzing the way the price behaves, the actions by the stones. Now, this barrier right here is called support. This barrier that is preventing the market from breaking below that point is called support. Now, support is a point where there is a large buy orders, and there's a lot of people have actually put a buy order there, or and those buy orders are actually preventing sellers from breaking below. Now, for sellers to break the support, for the market to sell below this particular support, it means that the volume of the sell will be higher than the buy order that is here. Okay, let me do this way. Now, look at this now. Let me use a really we are on the first floor, right? That means that if you jump across the board, nothing will hold us. You're on the floor. Yes, this floor here is acting as a support for us. So for you to be at this level, when other people are walking below you right now, they are walking on the ground. Now it means that you are standing on the support, and this support is this floor right here. Now if you move from this particular floor, this particular room right here to the next room, you still see that you are still at the same support level. Remember, while moving, you are not moving like on a straight line. You move on a straight line, means that you are a robot. Like robot, they have a roller, you roll them, that's the straight line. You are moving, you are taking step by step, and some of those step by step is irregular. That's the same with market. It's irregular. But at the end of the day, you see that you are still at the same level, same floor level when you get to the next room right there. So we are all on this support, and this support right here is very strong. Now you are placing your hand somewhere, that's another support. And that support is laptop, there's phone, there's book on it. That means, apart from this other support here, there's another support which is where your hand is currently at. Now, for us to fall from this support right here, it means that something really big and more powerful than this floor we are standing on have to break it for us to fall below this support. That's the same way the market works. So it means that there is a lot of cement rod that was bought with a lot of money, and then with a lot of money paid for the workers that put this whole floor together here. So it means that for this floor to break, that such that someone can fall this floor below it means that there has to be another heavier instrument that someone has to send or throw from above that will push this floor down. So, and that's where the sell comes in. So the market is buy and sell. Seller and buyer are always grabbing who will win. So at the end of the day, if sellers overpower the buyers, they win. If buyers overpower the sellers win. So now at this point here, at this support, because the support is very strong, market got here and then it pumped above. It dumped this expensive and still pumped it. So it means that in the future, when things change, you have to take note of those supports. You have to take note of that support. You understand? Now, in the reverse, if you look at here, you see that when market got here, it dumped. When it got to this point, it also dumped. At this point here, when it got here, it dumped. It got here, it dumped. When it got here, it dumped. What does that tell us? Now, if you draw a line over metal and lights, now if you draw a line connecting these points right here, where the market got to before dumping, now you see that it seems there's a force right there that is preventing the market from going above that point. Now that force is called what? Yes, you got it now. You got it. Yes, it's resistance. It's called resistance. Thank you. It's called resistance. So which means there is a resistive force right there that is preventing the market from flying above that point. You get the point? So now this resistance right here, at this point here, market got to that point, it dumped, got here, it dumped, it also got there, it dumped too. So what is resistance? Resistance is when there are so many sell order point that is so much that is preventing the buyers from buying above that particular price level. So now for buyers to be able to buy above this particular price level, it means that there has to be more buying volume that is more than enough to break above this particular sell level right there. So in the same analogy with our physical environment, we are on this floor right here, which is serving as support. Above us, there is a resistance. Okay. So if we are to throw this marker, it will definitely hit the roof and return back to the floor. When it returns, it will still drop on the support. Yes. But if, let's say, we want to break that resistance, this is a force. This floor too, this support is a force as well. But this one now is a buying force. They are both is a selling force. So now, if there must be anything that should break that force above, it means that that thing should be more powerful than that force that's above. Let's say you shoot a cannon on above this thing, you should be able to break above and then go beyond. And once it breaks above and go beyond, it will leave there with a hope, which means that the market has successfully broken there. Any other short made will keep breaking above. So it means that a market must rise above this point right here. The buyers have to be more powerful to break above this point, and then before market will continue on an upward trend. So when making decision, when making a buy or sell decision, say you are buying now, you need to, if you buy at a point like this, when the market is low, then you should be ready. You should be ready to take profit when it gets to this point. When it gets here or before it gets to this point, know that at this point here, market is likely to hit a resistance before done.